All right, welcome to the Aramir Roundtable. Today is the 10th of February, 2026. A special guest, Thomas Byron. I've known Thomas for several years now and hung out in the morning zero DTE trading room we used to run and got to know him pretty well. He's a great trader, a good teacher, lots of great strategies. And the Condor Nest was released a few months ago, but this is an update. And I guess the people that I've seen trading it really love it. So I look forward to hearing an update. So thanks for coming.
Thank you. Thank you very much, Tom, and welcome everybody. First of all, are we recording? Because I didn't see the usual recording message here.
I
Just a
think
quick.
we are. Yeah, we are recording. Yep.
Okay, fantastic. All right, so let me go through I will skip this time about my bio, to who I am or whatever. You will find this, if you follow the links and either on the Aramir website or on the Alpha and Omega website. So let's not waste more time with history. So a disclaimer though, Alpha and Omega and Thomas Byron, that is me, I'm not a broker, dealer, or investment advisor. The content given by Alpha and Omega is strictly for educational purposes only. Options, futures, bond, and currencies involve risk and are not suitable for lower investors. Past performance is not necessarily indicative of future result. This is for personal use only, and all the information about this presentation is for personal, non-commercial use only. If you want to have the full reading of the disclaimer, it's published on any of the website linked to this. Okay, let's move on. So what is the Condor Nest method or strategy, if you will? Well, the objective of the method is to capture the theta decay. So we are in a fixed risk position, and we will start positions with a flexible structure using time spread. And then we will transition in a low risk, high reward iron condor when the market will give us the opportunity. When we do that, we will basically change completely our risk profile, remove risk, and free capital to deploy it somewhere else. And you will see what I mean later on. So why we do that? Well, let's analyze the two things that are very popular in the market. Maybe the iron condor is more popular than time spread because it's on the same expiry structure. So, there are less discrepancy between what you see on a graph or on a visual representation and what you get at the end. So most of iron condors, different tenors, I mean different expiry, they look very attractive on paper. They show an high win rate, defined risk, and they collect premium slowly though. The problem is this though, that even if it looks like you win 90% of the time, when you lose big. And they take time really to mature any profit. And in most cases, the margins are pretty big to keep this, put it this way, this trade on, right? And so you are exposed to market gyrations, and is not a very efficient way to deploy your capital because you lock a lot of margin, and you just at market mercy, hoping that the market will cooperate and stay at the center of your structure. It is true there are methods that you can sell more verticals, adjusted, whatever you do, but they are quite time intensive, and they tend to reward you in a way that will force you to stay in for a very long time to mature some profit. On the contrary, time spread, calendar, double calendars, diagonals. Okay, let me say this now. If you are new to options, all these names are funny names. At the end of the day, they are a combination of puts and calls. So we use these names, and in this presentation, you may find what an iron condor is anywhere on the web, anywhere on our website, and so forth. So to keep it simple, we'll use these names. If you are new, you never trade an option, don't worry. You will find out all the information from A to Z, or from alpha and omega. So going back, the time spread are calendars, double calendars, and diagonals, where the time is different, but the strikes are different as well for diagonals. They also have their own problems. Well, you are exposed to volatility of the two, the one you are long and the one you are short, and the market moves. It is true that they mature theta much faster than most of the other strategies, but they need to be understood well, also because on your risk graph, even at the professional level, what you see as the end result of the first leg not necessarily represent what you will get in real life, real trading life. So, and that it's one of the problem why very few traders use them, because the uncertainty of what is under the hood, right? What do you see? So the Condor Nest strategy, in a way, resolved both problems, because it puts you in a position where you have the breaks for a time spread and you convert them as soon as possible with different strategies. One could be, for instance, to nest many and to expand the base and the probability of the landing final price. Another one will be just to have a way to control with one simple action the time spread. And that will allow you to lock in either a no loss iron condor at the break even, basically. That will do two things. Will remove completely the margins from your broker that you can use somewhere else. Therefore, you could build more condors in the market at a different strike. Or you can have just a sort of safe measurement to adjust and put risk on, risk off on time spread with a very simple mechanical kind of order. The position is so flexible that basically you can adjust it following the market, meaning that the market will tell you what to do. You don't have to forecast the future. You do not have to have charts. And it's very scalable, because remember, every time you put this on, you can put more. Risk is it's removed. So you leverage many times your money as well, and you expand your probability of a profit. So analyzing, for instance, a typical double calendar or time spread, you will notice that, yeah, they offer a good theta, basically a flat delta, and a flat gamma. So delta is, as you know, or if you don't know, I'll tell you now, is for a movement in the market for $1, how much this combined position will move. So the market moves $1, your delta is 2 in this combination, right? And the gamma is the acceleration of that delta. So it basically is your exposure to the underlying. In this case, the SPX, the full index, but could be ES Mini, SPY, whatever that is. We trade mostly on SPX for various reasons. The main one is cash settlement, means that you're not get any assignment or futures, or in case of SPY, the ETF, whatever you see at the end of your trading period will be cash settled in your account. And that is very important. Second is it's very efficient in terms of commissions. And ideally, you should trade it, and they offer extended trading hours, so the market doesn't stop at 4 or 4:15 Eastern time. So you're always in contact with your P&L. You can always adjust it, and that is a big advantage. So this is, to go back, is the step number one. It's one of the example, and you will see there are many. So there are, as I mentioned before, there are many ways you can play this. One is to spread as many as possible, removing risk every time. And so you diversify either across expiration or strike. When we say reduce regime dependence, it means that basically you get the flatter and a much bigger end result, because now the market has to move much more for you not to make money. Every time you do this, if you decide to go to nesting more than one, you can think about it as a continuous cycle. When once is locked, risk is taken off and you have more capital and you deploy somewhere else. If the market doesn't move, that's good because you pin. So the initial structure stay at the center and you cash basically zero risk on 2 lots, $1,000 profit, right? So this is what I would say is the difference between professional traders and retail traders, or good retail traders that became mentors. One of the key is the best usage of your capital and the scalability. Scalability is an asset. Flexibility is an asset. The asset of flexibility means that you are always in control, regardless of what the market does. You have a strategy to adapt. And regardless of how much capital you have, you can leverage few folds on top of the leverage already offered by options. So this is very appealing. Obviously, if you think about a traditional option spread, you put 2,000, 3,000 in margin, the capital is tied until you close the trade. And then at the end of the day, you are a passenger, right? You put that position as fixed, right? And yeah, you can do a few adjustments that in most cases require more capital. But at the end of the day, the market has to remain with your initial vision. If not, you may end up with no more capital to defend the position or to take a loss. So with the Condor Nest approach, something different happens, that even if you have a small capital, your initial time spread position will mature very faster than many other position. But every time that you lock it in, and with practice, you will learn how to lock in profit, not just the break even, the margins is removed. And so you can use it somewhere else. When I say somewhere else, it means in another strike, or even you can put it in treasury bills or somewhere else. That really cash is yours, right? There is no more risk. There are no more margins. So I think we just covered this part already. So, and this after you lock it, you will notice that it's different from once you lock it in. Is different from a regular iron condor. Why? It is true that the magenta line has still some money that you reinvested in this position, but if you take this position, the worst can happen to you and your P&L is to make 310 dollars. And another thing you notice that this compared to the magenta line, compared to a regular condor, is very flat. So they'll give you plenty of time. In essence, you have no risk here. The risk is, it's just different from where you are now, your P&L, of and where you can end up with this position, if you have one. So let's say now you're covered this market here from 66.85 to 67.25. So that means that if we stay in this range and you have only this one, this at the end of the journey will be your profit, will be 1,350 roughly. That serves two purposes: that should the market move here or there, up or down, then you will have started a different process. So if I combine 2 or 3 of this, now my range is going to be very, very big. And that serves another purpose that I notice most of the time. Retails get scared. They over adjust. They follow the charts to get a sort of guide where the market is going to end up. What happened to me if the market dive or the market goes up? With this position, your mentality will change because you always have the breaks. You decide yourself how much you want to lock, and you can keep it really until the end of the cycle. So you leverage few folds your money, and you are calmly adjusting your book. So somebody may say, all right, good. That looks very simple. Well, it is, and it's not. It is simple in the execution, and it's so simple that even if you don't understand all the nuances of this, you can still come on top. And I provided, and it's very flexible, meaning that you can do it the way you like it. But I provided the base fully disclosed with every single adjustment, and I selected basically three different scenarios that for me, my testing are the best. The Condor Nest 0, that means you will open this on Friday, previous Friday, expiring next Friday, or on Monday, expiring in the same week, Friday. That's why it's 7-4. If you started on Monday, it's 4, means expire. You put it on at the open or close on Monday, on the same week, and it will expire 4 days later on the same Friday. Then we have the one representing the 1 week forward, that will be the 14-11. And then you have the 14, Condor Nest 14, that would be 21-18. Same idea. So you will see that these are just the base, but you can expand it the way you like it, right? But these are my suggestion as you start, because this will have to become completely new for you and mechanical. Mechanical doesn't mean that you don't have to think, but you will not under stress fail because you have a plan. You know exactly when to add, what to do, when to enter the first structure, when you convert it, and how to convert it in a way that is balanced or unbalanced, right? So basically all you have to do, you have to follow the market every once in a while and see what's the score. I mean, how long you are how far are you from a break even as a start? Or if you give yourself a target, how much you want to be locking into every condor is up to you, right? I suggest to start practicing first, obviously, with a break even, right? But that doesn't mean that you just lock at the break even. And bear in mind, let me go back a second. Obviously, these three initial setups, sorry, there is an ambulance probably or police. Let me give you a second. This will mature for the time spread at different speed. And I will tell you later how long it will take to mature, how long you have to be exposed to the time spread. So, as we said, flexibility, it's a very good tool to have at your disposal. And obviously, adaptability goes with flexibility. Many times, I've been asked this question. All right, but give me your performance on this. Basically, how this really in practice, what this method achieve. That is a tough question because, my performance might be completely different from yours, not because I'm better, but because I'm sitting here all day long and I'm a professional trader. So that depends. Like any other activity, if you spend a lot of time in front of your computer, obviously you can fine tune your position. But if you have another job or you are not inclined to stay glued to your computer, put it this way, obviously your performance cannot be compared, right? But nevertheless, any order is mechanical. Once you enter the first position, you have to probably put your first target and move from there. So you are never really under stress because now you have brakes, right? You can go very fast only if you have brakes. We said this already. Once you lock into condors, risk is removed, capital required drops to zero or better, meaning you lock in a profit, you free margin, and the cycle repeats. So, in essence, theta positive from day one because you use time spread, are much better and faster. But at the same time, they have complexity, but you have the flexibility to adjust before committing. Low risk, high reward once locked, scalable, repeatable with capital recycling. So even a small account or a big account for that matter can leverage many folds the trading capability. So what's included on the workshop? The workshop was hosted a couple of months back, and now it's became what it became a course, another workshop live, right? Well, in the Condor Nest material, and I will show you exactly what you find inside, there will be a step-by-step process applying everything, every adjustment, managing the trades, the entry trades, the adjustment in a clear form. And there will be a checklist available so you can check anytime and what part, in which part of the process you are and what to do. So it's not just, compared to some other course that I did in the past, I realized that the people need initially a structure, and the structure it's given. On top of that, you will have Excel Trade Manager. We have custom built or adapted to spreadsheet that will help you to see the orders and to deploy the orders. One is developed by me and is used in Interactive Brokers. And the other one is developed by Tom and is using Thinkorswim. So they will be given inside the work, the course example, many examples, step by step, and you will learn really, even if you don't know anything about options, everything is covered, right? You can start by asking yourself, what is a call? What is a put? Or even what is a stock? Everything is provided. And bear in mind, inside already there are around 100 or more students. Some of them are fund manager, some others are professional traders, some others have never traded an option before. So they are spreading all over the planet from Australia, New Zealand, Japan, Europe, the States. So I would say this because that means that they can put trades any time on the day, right? Their day. Okay. So you will have you have a Discord private community connected with fellow traders where you can exchange information, ask questions, and you will receive help from them, learn from their experience, interconnect, discuss. Sometime I will participate, sometime, there is no need for me to participate. Every session is being recorded and has a question and an answer part at the end. So inside, physically, once you enter the website, you will have under your profile, you will go under curriculum. This is called Learn Press and is using this kind of setup because it's been proven that this is very methodic, and you will have inside quizzes, so you can test your knowledge before you progress and so forth. So these are all is divided in section number 1, where you will have bear in mind, even if you don't subscribe here, when you see this, you can still log in and have a look just to see the format, right? When you see this, it means that it's free for you to browse. When it's locked, obviously you have to be a student. You have to have enrolled. So this will explain we trade, what we trade, the style we trade, but not only, as I mentioned. There will be dedicated sections on the formula itself, the volatility risk premium, and so forth. But the bulk is class number 1, class number 2, class number 3, class number 4. There are 4 classes. Then you go to the extra. The extra are lessons on the Black-Scholes formula, Black-Scholes quiz, statistical distribution, and many other recorded for hours and hours of recording, basically. So once you get into this, you will have also a presentation of how to use the tools given with the clear instructions, the adapted tools that you will be using. Then you get into documents. They're very important. In documents, you will have a PDF of every single class, some other the guidelines, how to trade from the start, and all sorts of things. And this is very important here. These are the rules, expanded rules. These are basically alpha to omega, everything and when and how to deploy the 3 templates provided. But it's not ending there, because if you want to go further in your knowledge, there will be descriptions of how to use a square root of time, derivatives, introduction, statistical distribution, the original Black-Scholes formula 73, Black-Scholes explain, all the stuff. Now, you see, there's a lot of material here. This is also important for the students. It's the Condor Nest 3 checklist. So you'll checklist at every time what is the status of your position. So, okay, that's class by class, the subjects, right? I'm not going to go through reading to you all this, right? You will have the PDF here that is clickable. We'll link to the video files and some other material. But in class number 2, that's what we discuss. This is class number 1, we discuss. Class number 2, class number 3. They all last around 2.5 hours, roughly, a little bit more. Not more than, let's say, 2 hours and 40 minutes, I think was the record, if I remember well. Class number 4. And these are the setups I mentioned before, provided. That doesn't mean that these are the only setup you can deploy, but these are the starting templates, example, detail in every single aspect. So once you master this, obviously there is more risk in the 0, right? Because everything moves faster than the 7 and the 14. So it's entirely up to you which one to choose. I would suggest you start the slow motion one, right? The one that moves slower. So you learn first this one. I use an analogy and I say that this is your family car, this is a rally car, and this is still a fast car. But if you go on a 0 DTE, that's an F1, that's a NASCAR car. You don't start driving after your driving lessons with that, right? So, but you will say, oh, but do I have to study all that stuff to learn this method? Absolutely not. I mean, you can just follow the rules, watch the videos. As I mentioned before, that depends on what you want to do with this, right? How much time you want to dedicate to this. But I thought it was fair, since the composition of students can be, as I said, somebody never traded an option before, or even a stock, to a professional fund manager. So I have to provide the full coverage, right? But it's completely up to you, right? But bottom line, if you just follow those guidelines and templates, you don't have to go through the rest. You do that, though, if you want to personalize the style, if you want to have a better understanding of this strategy, this method in particular, or any other option strategy. That is good or I have a couple of students that are preparing a thesis for the university. You can use this because you will pass. If you learn what is inside the course, this is a university level. Of course, you will have to go through the whole course, statistical distribution, other material, other reading. But if your goal, if you are a student that need this not to trade, but as a university for learning, the material here, I think is sufficient for you to build a thesis around it. So obviously the workshop was recorded, as I mentioned, 2 months ago. So the next question would be, did I miss something or anything from the live? No, in fact, has been clean, edited, and refined. And material will be added and has been added already to implement this. Plus, you have the Discord channel that at the time of recording didn't existed. So there's a lot of more material available to you. And if you have a question that has not been covered in the question and answer session of the live workshop, now recorded, you can ask you can ask directly to me or some of my staff, or you can ask other students. Probably better, because probably the answer is going to be more closer to what you really want to hear or what you really need, right? So these are just links to the video explaining to you as I mentioned, the spreadsheet. Once you have the PDF, you can click and you can watch the video. The first two here are from IBKR Interactive Broker Directory to explain to you how to use BasketTrader. And this one is the tool that is provided, sort of helper, to preload into BasketTrader TWS the orders. And the orders are pre-formatted template, so you just copy and paste. Same thing for Thinkorswim. In this case, it is the famous GOAT, great spreadsheet of all time, from Tom Nunamaker. So this is what you find inside the helper for the interactive broker kind of thing. And this, by the way, this is flexible. It has templates specifically for this strategy, but you could use it for any other strategy. And this will be the final kind of common separator file. You'll have to be submitted, stored into TWS, deployable at any time. This is always with BasketTrader, there is a manual. On top of that, you will have, I built a converter. So if you have a toss order and you want to see the breakdown on how that converts to interactive brokers, you will be given access to this application. Works on any browser, where you put basically a toss order. Sometimes can be complex, and you will see the details reveal, put it this way, and you can see the equivalent order for interactive broker. Or if you prefer, you can download the common separator file to be immediately inserted into BasketTrader of TWS. So this is just to give you a fly view of what is inside the Condor Nest private. By the way, you are free to join the Discord channel, Alpha and Omega, the invitation at the end of this presentation, but you will not see the Condor Nest private unless you are a student or you enroll. As you can see here, that's the motive of this. But this is free. There are news feed. Most of them are from Unusual Whales, some other details about the market. Every day there are some constantly updated following market in general, options specifically, but not only. So if we move forward, this, as I said, it's a free invitation. Obviously, it doesn't include the private access to the students that enroll, but you will see the rest of the material there. So the question is this right for you? I think I covered this before. Even if you're completely new to option, this gives you the ability to start from scratch. And sometimes, like another compare analogy with sports, is better if you don't have any pre-concept about options. it's probably, I noticed that if you start from scratch, this is complete. It's probably you get sound base as a start or a new start understanding options. So these are from the Condor Nest private, are uh, some of the messages, right? I wanted to put also a bad one, to be honest with you, and you will find out once you enroll, but I couldn't find any. So either the people are shy, but I don't think there was any bad one. So this one looks bad because I say, well, everything looks so good, it must be fake. No, unfortunately, these are real, but I couldn't find any bad one, right? So, guy said here that he already paid for the course or whatever, right? So this is by the way, some of these are still in testing. The one I post here, they're all real trades, okay? So this is the final structure of some of the user, right? Obviously, I cut the name. You will find out exactly this because the Discord will keep every data there as a history. So once you enroll, you will find it. It's not something that I created or whatever. You can ask the student that was in this position if you want further details, right? So that's a recent one. That's another position from a student. That's another one, right? You will see this. I mean, I'm scroll down and you will see this in the PDF anyway. So that's another one. That was an incredible pinning. Put it this way, the best that can happen to you, where you can worst case scenario. I don't know what it is. You make 250, but you end up making I don't know 1,800, 1,600 here. So this is the ultimate pinning experience, right? So
Oh, that's some pin.
yeah, that's some kind of pin but this is real. And when I saw this, I said, well, man, this is unbelievable. There's also the extra juice there, exactly where it pin, right? So that's unbelievable. It was a couple of weeks ago now. I cannot see the as very small, but the dates. And this is all recorded there. Some kind of pin, as you said. All right. So what are the extra benefit of this? Well, as I said, the spreadsheets are sold also individually, and for a year, there will be about $250 each. The spreadsheet, the design for TOS and interactive brokers, right? Okay, but that's nothing basically, but it covers part of what you get, right? So you will have continuous updates. I'm not talking now about discussions in the Discord channel, but I will make, once this is stable and people get to know the method better, I will give extra. I've done already extra sessions live in Discord showing real example of discussing volatility, discussing other things. There will be extras and you will be always included as far as you're a student. Then it will be a special enrollment discount if, and I put, if we put this into trade alerts, and I'm debating with some other people here, because you see, one of the great assets here is flexibility. So it is very difficult to confine this to trade alerts because you may be missing out. And one point is that, as I mentioned before, if you are in Australia, maybe you can do the open or the close, but if you are in the States or in Europe, so this is so flexible basically that you should not restrict too much. But I'm thinking of putting the base, the templates, at least, to guide you to see real execution and real trades. But as I said, if and when we do that, obviously you have a special enrollment discount and priority. Plus, I'm building other tools together with other people, and you will have free or testing or special price and new dedicated tools when available. I know this is all in the future, but I'm working, and I just, some of the students were part, I think last week, of a presentation. I'm building some few graphical interface similar to Thinkorswim, but that will take time. Not much, but it will take at least a month or two, or maybe 2 to 3 months. I'll be realistic. Okay, so what's the bill is? Right, I had to put 599 because I have another product selling at 600, so I will not recognize. It's not a marketing scam. Say, oh, why don't you put 600? because I have an alert at 600 and then I get confused, to be honest. But it's 599. This is the link in the PDF. I will take you directly to the payment and you enroll. That's it. That's my presentation. I think it was pretty fast. And if you want, by the way, this entire PDF, clickable, and so forth will be available as soon as on our website or
Yeah, I should
Alpha and
get that
Omega.
out later today.
Yeah, Alpha and Omega, whatever. And one thing about a PDF that when you see, for instance, the video from the PDF directly will take you into YouTube or whatever the video link to that address is on a PDF is active, put it this way. So that's about it. I mean, now if you have any questions, I don't know whether I can see. If you have any question that I can possibly answer, or maybe Tom will answer, or I'm
Oh,
here.
well, Eric asked about the trade alerts, but you already covered that. I put a link in the chat for people if you want to go right to the Condor Nest webpage to buy it. But there's no more questions, really.
I think I did a presentation. That's an update. So the easy part versus the presentation number one, that I have something to share apart from the
Yeah.
method itself. So
Oh, it's nice to see the success stories too from the students.
yeah, but I want to say something. The pinning there, the pinning that you see, like the cupola pinning, I mean, that's too much
Yeah, you
even
can't
for,
count on that.
yeah, and
Right.
I can't count on that. I mean, if you don't achieve that one, then they can say, oh, well, yeah, but of course you show that. Let me tell you, you need to be extra lucky to do that, right? So,
Yeah. I remember Tony Sizemore entered a SMB trading contest and he pinned a butterfly and won the contest because he pinned it. So
yeah,
it can
yeah, I know,
happen.
but that's as I said, I
It's
also have
luck.
some extra, yeah, that I discussed. You can do this not necessarily locking into a broken into an iron condor, but you can do it also with butterflies. But as I said, it becomes a pinning contest. So an
Right.
iron condor of your bigger base. Do you set your trades for Fridays? Oh, well, I said that not necessarily. You can enter on Fridays in certain occasion. That if it's right time to enter, there is description of when you should enter the initial phase, or on Monday. Also, uh, should always, another question before you ask me, should this be always next Friday and Monday? Not necessarily, but because this to work, it works, obviously may work in some occasion also for a 7, 15 or whatever, difference between the initial time spread. But my suggestion not to have the two volatility going different ways too much is to keep it 2 days apart. Inside the course, a will description of when you place something around the Federal Reserve meeting, for instance, that happened on Wednesday. So I think one of the example here was just that. I think it was this one, or maybe the other one. I don't know. Maybe this one. There was one I cut apart not to show the name and the real P&L. These are real trades, right? This was just during the Federal Reserve meeting. So as far as you stay 2 days apart, it's probably better. Why? Because volatility tends to be moving uh, between the legs. Not, I mean, they don't diverge so much that you can have a real volatility crash or real risk of getting totally outside your tent in terms of performance of the first entry part. But going back, I personally prefer, even if you miss a little bit of juice at the start, to put, especially for the zero DT, so the same week on Monday instead of Friday. In the market, you may end up on Monday morning totally somewhere else, right? So, yeah, you get a better price of entry, but you take the risk that the market may open on Monday away from where you were, right? On Friday. But as I mentioned, every one of this position can be put at open, at close, preferably on Friday and Monday, but it's not a general rule. This is just for the templates. Once you develop your own method and this will adapt to your style, you can put this even in midweek, right? For the following week, right? There will be an example of one put on Friday for Friday, expiring 0 DTE with a video that lasts, I think, 1 hour to show you what happened. And this is part of the learning process. And there's an entire video dedicated to that. So like anything else, once you get all the various colors, the ingredients, then it's totally adaptable to you. So that's the key, right? That is the key. That's the flexibility. And since the market tends to move a lot, this will offer you the breaks. So you be bold as a trader because you know how to get out with one simple click, right? Or two. The click is not always the same. There are three options. It's like a bullish conversion, bearish conversions, a flat conversion, right? You don't necessarily convert everything at the same time, so you have plenty of time. Second part, this can be automated directly inside, putting an order directly inside the platform, the major platforms, whatever the platform is going to be, or using external systems. That's plenty. There are plenty of people offering this kind of thing because the order is very simple, and you don't need hundreds, and the market doesn't move. You just put your target, and you can adjust it. Or you could put the order and monitor that order with your mobile application once it's in, right? And monitor every once in a while, But as I mentioned before, if you are in the 2 weeks forward expiration, you can monitor once a day, unless, if the market really crashed 300 points, you will know, you will see somewhere, right? I wouldn't suggest, like anything else in life, even feeding your dog, with automatic machine. If you go on the Antarctica for a mission for 1 week, disconnected, well, don't trade and take your dog to to somewhere well they take care of because so in a way you have to control this position, but if you start with a 0 DT, you have to be on top of your platform all the time until you get out, right? So it's as you understand, it's a sequence, right? The more active, the closer, the more active. No, okay. Well, there is another question there that say, yeah, will the code show? Yeah, the code will show every single template. Yes, with the three templates example with all the adjustments. Do you tend to go straight calendar or diagonal calendars? Well, mostly calendar unless there are special situations, but I would recommend to start with calendars. It's easier to follow. The order is simple. Uh, Also, another note that you will learn. Here, we tend to build this iron condor on the first aspiring leg. But, and is explained, is not part of the templates, but is explained during the class, you can do the opposite. So you can build the iron condor or even a butterfly on the second expiry leg. So you move everything to the second expiry, starting from a time spread. So as I said, it's totally flexible. The fact that there are so many, I think that the three templates with all the adjustment, all the levels where to adjust and everything are more than enough for at least the first 6 months. But then, as I said, if you have a special requirement in a sense that you trade only at a certain time because you live somewhere else where you miss the open, you miss the close, you will understand. It's totally flexible to you, not to the method, neither the market. But initially, we had to fix some rules, and the rules are the same. So once you see the difference between the three tenors, put it this way, the three expiry, you will understand the speed, you will understand the market volatility, when to put, when not, when to stay out. That will be everything covered step by step.
And then there was a question about straight calendars or diagonals.
I think they just answered that. I
Oh,
mean,
they went. Okay.
Yeah, if it's not too far away, the diagonal, yeah, could be an alternative. In fact, some of the students put just that. The problem with the diagonal can be a bullish or a bearish diagonal. So that has to do with the structure of the volatility, because if you buy something closer and you sell something further, put it this way, and volatility change, well, that will affect you in a different way, right? So those
Right.
are all variation that probably I will cover once, the bulk of the method has been totally absorbed, not to confuse students. But obviously that will deserve at least a lesson, 1 hour, to explain to you in detail what volatility does, comparing an inside diagonal, an outside diagonal versus a center, a time spread, a calendar. So it will require an extra uh, evaluation on your entry point, a more complex valuation, a more an analysis of and a forecast of volatilities that goes a little bit deeper. But as I mentioned before, since the performance of this is pretty straightforward and quite powerful, you don't need to get too complicated, right? Get the simple stuff right first, and then start thinking complex stuff.
Sounds good. I don't see any more questions.
Last chance to ask me a question.
All right. I think people have it. So that's a great strategy. Again, I put the link in the chat and I'll also put it on the recording. I'll get this out as soon as we can. And thanks again for the update. Really great strategy, and students are getting great results. It's really nice to see.
No, thanks to you, Tom, and thanks everybody attending here, and thank you also for the people that will watch the recording of this video. And reminder, the PDF is clickable. Have a look at the PDF if you miss something. I wanted to keep it within 1 hour, to get boring, but I
Yep,
think we cover most of the stuff. And more information is available either on Aramir or the other website. So as I said, you link if you want more information. If you have other question, ask. And not a problem at all.
perfect.
Thanks, everybody.
Thank you. Thanks, everyone. See you next time.
Bye.